of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
Yeah, I thought maybe we caught him sleeping today, but looks like not. Up a little bit 7.5 points on the S&P cash. Volume is very light today. Not much going on. Dow's up 50. NASDAQ's up at 18 points. But again, we're going to probably have less volume than we had on Friday. FOMC meetings start tomorrow, go through Wednesday at 2. I suspect that they're going to be a lot more hawkish, especially after the latest inflation numbers. Probably look at expecting one more rate hike being added on at this meeting. So we'll keep an eye on that. But to me, I think they're going to come out fairly hawkish this time. They're starting to see inflation start to pick up, and probably going to get one more rate hike. And then that will be it, my guess, for the rest of the year. But they'll talk about additional rate hikes, and the reason they'll do that is maybe they'll put one more on before the elections start up. But you basically got to get this all out of the way by August before the electioneering starts, or the politicians will climb all over the FOMC. So I think you're going to hear kind of a hawkish tone. My guess is that they'll talk tough and do less until after the midterm elections. And then we're probably going to see probably both meetings after that. My guess is you're going to see the rate hikes. But talking tough, I think we see that fade going back into the elections this fall. And then as soon as the elections are over, we can look for probably another half to 3/4 higher very quickly after that. So what do we have going on in the actual indexes? Well, we continue to push higher in some. I continue to get sell signal after sell signal after sell signal, and in a variety of ways, not just volume, but that is it. Seeing some retests today, but the IWM never really could get going. Also the SMHs, the semis, really no juice to push higher. Pretty much just looking at a handful of the internet stocks that are really kind of trying to push the market higher. And of course, a dollar in crude went to that part of the market, and that's kind of where we got the strength. 27.85 on the cash, which is we're just about 1.5 points higher. Below that, we probably continue to see selling coming back in. I would not be surprised to see a little selling all the way into that FOMC meeting on Wednesday at 2. I am about as bearish as you can get. Not at the same level of a pullback of 2008, but for the amount of signals that I have that are flashing danger signs, about as much as you can get. I only have one position for this week for options, and I added that on Friday. I'm going to sit through that no matter what happens, unless I know for a fact that it's not going to pay off. But I got less than 50 cents in that one. I'll be looking for additional option positions for this week, but I kind of like that one. If that one's right, I'm going to make buku money before Friday. For the rest of them, I know I'm going to have to sit on my hands probably all the way through mid to the end part of July. I knew that when I was putting them on, and that's why I kind of went out there for all the option positions into July. Tops are very messy. and they make you want to give up 100 times. And a lot of times that's almost the key. If you just feel like walking away from the market, and it's always when everybody finally just gives up that the market kind of pulls back and turns down. Again, anyway, we just have kind of like a couple of points on the S&P cash that if it pulls back below, we're going to probably see more sellers into the close. And as I said, in the next couple of days, Wednesday at 2 o'clock, and what happens after that is going to tell the truth. Options can continue to show much lower. We'll see if they change at all today. But options show that the market makers think that the S&P could certainly go to 2,700 or below by Friday. And we've got a lot of economic news this week. That may just be a lot of people buying downside protection, but I would be very surprised to see us close over. I'm thinking more closer to 2,700, but anything over 2,750, I think, would be 1 in 10, the way the options are lining up. So, maybe it's not the end of the world this week. Maybe it takes all the way into July, but there's weakness in the July options down to 2,600. So we'll see how that actually pans out. Mine was very slow. I don't know what that is. Okay. Let's take a look at some other stuff. Oh, why don't we just go to a little bit of history, and then we'll start getting into some charts.
Then it's all just a little bit of history repeating.
On this day in 1955, a racing car in Le Mans, France, that's the way you say it. I actually went to this once. It was a lot of fun. Goes out of control and crashes in the stands filled with spectators, killing 82 people. The tragedy in the famous 24-hour race leads to a ban on racing in several nations. In fact, about 5 of them. Mercedes-Benz got totally out of racing and didn't get back into racing, I think, into the 90s. Maybe it was the early 2000s. And I think it has kind of always dogged them that they didn't have a lot of research and development in race cars going on. This is first organized by France's Automobile Club and first held in May of 1923. It since has been held nearly every June. The races always begin at 4 p.m. on Saturday afternoon and last the next 24 hours over a 13-kilometer course running through the country roads near Le Mans. And at the very beginning, you had to actually drive the whole 24 hours, but everybody kept driving into walls. So they finally said you could have 2 drivers and you could change every 2 hours, and that's gone to a mandatory 3 where no one drives more than 10 hours out of the entire race. But interesting. There's a great documentary called The 24 Hours of Le Mans. And I think it's 1968. 68 or 69 right in there. And it's Ford versus Ferrari. I think it's Ford. Yeah. Ford versus Ferrari. And one of the most epic years of racing. It's a great documentary if you get a chance to see it. We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Making the news over the weekend is Jack Dorsey. He went and ate at the wrong place, and the Politburo and the Soviet Union decided to come after him. It's down a little bit today. Don't see a whole lot. Oh, he did apologize. That's all that mattered. Anyway, down a little bit of a volume, almost no volume today in Square. This looks like the better of the two companies that he's in, at least in my opinion. TWTR, kind of the exact same thing. Just a little spike out here, though, and a doji, but very light volume again, high 19.6 million shares compared to 34.5 million shares on Friday. So that doesn't seem to be affecting those companies. Wasn't a whole lot else going on. Wanted to start looking at some of these that are testing previous highs. You wanted about 3 million shares today in the retail ETF, and it actually is breaking out with 4.6 million shares so far today. So retail continues to look interesting as long as in consumer cyclical stuff, Procter & Gamble, that kind of stuff, looks like everybody's coming in. But when we look at technology, it seems a little bit more mixed signals. March 13th in the XLK, we had $71.12 with 13.8 million shares. And you got 17 million shares on the 6th, so you went above that, but you instantly closed back below it the next day. You had a little bit of a bounce on Friday on 9.9 million shares. Today, just about no volume in the XLK, 4.4 million shares. What's the VUG here? To Vanguard Index Funds, one of the bigger ETFs, VUG, bouncing around its resistance levels, 152.02, with, let's call it 2 million shares. Into it today with 272,000 shares. As I said, I can do a lot out here on individual stocks that are giving fairly weak signals. The VF Corporation a couple of days ago tested the February 15th high. That was $83.46, 3.4 million shares. Got into it with 2 million shares on June 7th. And yeah, so you got into it with half, you're pulling back into it. Energy off this May 4th spike down, didn't have all that much on the way back down. These all kind of look like they're going to come back in a trading range over time and come back and test the previous low. Teva Pharmaceuticals, this is an ADR back into its gap. Let's go back here a little bit farther here. Back into this gap where it really started coming down. It's got a little farther to run, but the last time it was up in this area, January 12th of this year, 2264, 40 million shares. Friday, you had 22 million shares. Today, you got a little doji out here on 9 million shares so far. So you want to watch that. Spotify, fairly recent IPO, but up testing its previous high at 171.23, the May 2nd high, right after its IPO, came in with 7 million shares. Got 2.2 million shares on Friday, a little bit more today, 3.5 million shares. But you're going to be kind of light on that one. I have no idea what justifies Spotify's price. That may be the most insanely priced stock that I can think of right now, with a lot of insanely priced stocks. Looking at Six Flags Entertainment, which should be doing pretty good here, middle of the summer. February 16th, the last spike with 1.8 million shares at 69.66. Friday, we had 1 million shares. Today, 600,000 shares. Looks like you could come back in close to 1 million on that today. Let's take a look. Okay. Little bounce, 2787 on the S&P cash. They got a little bit of it. I don't know what that is. ROP. What is that? Roper Industries. This one's coming back into this gap down that had not that much volume, 400,000 shares, but it's just kind of going back into that resistance level, not that much. RBA. What do we have? I think this one was a little closer. Here we go. Ritchie Brothers Auctioneers had a huge spike on February 27th with 2 million shares. We've been kind of just going through that the last few days. Friday hit 408,000 shares. Today, 172,000 shares. So I'm looking for a few of these things to start pulling back in. Of course, we got the big signal last week with the Qs testing the previous high, and we kind of came off that. Had some decent volume on Friday, down on 31.8 million shares. Today, we're up on 15.2 million shares. So just kind of going back up into the 55 million share high from March 13th. But this is one of the long list of ETFs testing previous highs with ridiculously lighter volume. And I just think the market hasn't got the memo yet. Public storage, 213.45, which is December 18th high. That had 823,000 shares. Getting into that with just a little underneath that on Friday, 770,000 shares. A doji out here today as we actually break up to 217, just 434,000 shares. Post, which is Post Holdings, breaking through a new high. And again, the ones that are doing this, of course, I'm pretty sure this is a serial company, right? You can give me a call at 877-927-6648. Okay, well, let's look at the profile. Okay. Consumer Packaging Goods Company manufactures, sells radio. Yeah, it's a cereal company. Just wanted to make sure I hadn't gone insane. Anyway, you wanted something in the neighborhood of 700,000 shares back from March 15th's high. Yeah, a little over 1 million shares. Today we've got 384,000 shares. So again, very light volume market as we move through previous highs. Netgear, this is one that I didn't really expect to see in my scans. It is actually coming up to its resistance at 64.10. That's the April 18th high. This came down, though, on earnings and blew apart on February 7th and did so on 2.7 million shares. Again, today we're up on 178,000 shares. And this is when you start seeing these stocks and or ETFs with a tenth of the volume that they had back in these down days. And you really have to start saying that these are extreme warning signals in a handful of these stocks. Morgan Stanley could be setting up a nice ABC on the way down. Let's do the ABC here for this one. Oh, we're going to have to do that when we come back. I think. Where do I have it? There, got it right there. But we'll continue this on the way back down. I think you can make a fairly decent case for Stanley and it's pop off this May 29th. Good ABC on the way down. We'll be back in a minute.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. We were looking at Morgan Stanley. Do I have any? Okay. Anyway, nice pop you got a 50% retracement, actually 52%, up to the C point at 52.72. Gone sideways today. You don't have much in the way of volume either. Kind of a nice setup if you would have taken that somewhere in that 52.50 area, which would have been about halfway through that gap, which is what I like to do. Anyway, you spiked it on June 7th. You've kind of pulled back out here, but kind of nice. One-to-one ABC takes you to 46.59. So let's do this. Exit out of that. You've got 50. Let's go back a ways. Oh, where's it? Okay. There's that gap right there at the $43 level, which takes you right back to, what is that? September 7th of 2017. If you want to go back and look at that gap, the 8th maybe of September 2017, where this thing started back up. But you've got kind of a nice little pattern out here that takes you back to that level. And not exactly sure what's going to do on it. A lot of people have been talking about counterparty risk with the German banks, and the question about whether or not these guys have maybe some cockroaches running around in the evening. But we'll take a look at that. Keep an eye on it. Let's go back and do this. Okay. The Mosaic Company testing its previous highs. $29.15, February 26th, March 9th of this year, 29.16. You had 7.5 million shares. Friday you had 3.7 million shares. Today you got 1.7 million shares so far. So going back up into these highs, I wouldn't be short this one, but I do think that you've got a little less volume on the way back up, and certainly no volume as you test previous highs in this. MDCO, which is Medco, a medicines company, another one that's running into this high $35 resistance level, and you wanted something in the range of 2.3 million shares. On Friday, you had 1 million shares. Today, you got 217,000 shares. And like I said, I can probably find a couple hundred stocks like this that are really doing something. I don't know. Did this company split? I didn't get a chance to check it out, but let's go ahead and look at it. LQ, La Quinta. It must have split today. I forgot about that. If it's on. Yeah. Oh, okay. They had a La Quinta acquisition. Okay. That makes sense on that one, so I can get rid of that one. JWN, another one. This is Nordstrom. Up on the, go back. There we go. Nordstrom, these retailers all kind of hitting highs. 53.26, which is the February 23rd high. You had 7 million shares. You got into that on the 7th of this month with 2.5 million shares. Friday, 1.6 million shares. Today, 1.1 million shares. So again, these things are probably about as good as they're going to get without some kind of earnings surprise. I wouldn't be short the retailers. They are the strongest ones in the bunch. But we have a lot of stuff. Infosys is another one, INFY. This is an ADR. When we look at this one, it's the $18.71 high from January 24th with almost 8 million shares. Last 4 or 5 days, 3.2 million, 3 million, 3.6 million, and today 1.7 million. So something's going on right at the level where you're going to be right or wrong fairly quickly on these, but there's just not a lot of juice in them. You can give me a call at 877-927-6648. And yep, Boeing is on my list, and I'll get it in just a minute. But it's another one that actually starting to give some sell signals. IDEX Laboratories, IDXX, the last high in this one was 804,000 shares, May 7th, 217,000 $6.89. We're going through that today with 117,000 shares. So, just nothing for volume in most of these stocks out here today. And again, I'm kind of watching one eye without of one eye. If we can get below 27.85, I suspect that's where we're going to find sellers today, because they just moved this thing up on very light volume. Let's see what we got. We got 3.7 million shares right now, where we had like 6.1 million shares all of Friday. So I'm wondering if we're gonna get into that 6.1 million shares today, or if it's even gonna be lighter. It's gonna be kind of close. H&R Block, we've got two highs, one at 7 million shares, one at 9 million shares on March 7th. That was 29.23. Friday, we had 2.3 million shares. Today, 1.6 million shares. So going to come in light for sure on this test of H&R Block. Symbol is HRB. And I'm wondering, with the simplification of the tax plan, these guys are mostly, they're not doing a lot of business taxes. So my guess is these guys, is this the year these guys are going to really get hammered? Or is there something that they are doing where they're going to be able to make that money? I think it's interesting. I know they got into loans and some other stuff. But if anybody has any ideas on why this thing should be up when, for all accounts, their business is going away, give me a call at 877-927-6648. EW. Edwards Life Sciences. This one's breaking through a 2 million share high from March 16th. That was 143.22. We're going through that today with 821,000 shares. So we're doing about half of the volume at this moment. Okay, what else do we have? ePay, keeping an eye on that. Okay, Bottom Line Technologies. This spiked to 49.31 on May 7th, 700,000 shares. Getting into it today, a little less than 200,000 shares right now. So again, like I said, maybe something happens, but it's not going to be earnings. And I don't think it's going to be financial news in the United States. But you're right at these levels without a lot of volume. Probably the one that is most at risk is the Boeing company. They didn't have near enough energy off this March 28th low. I like other stocks better as shorts, but I think in the Dow and some other ones, this could show the kind of weakness, or one of the stocks that could show the weakness. 369.89 with 5.5 million shares February 28th. Got to that with like 4.5 million shares Friday, 3.3 million shares today. A little doji out here, 1.8 million shares so far today. We'll be back after this.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Wow, that sounded awful funky. But we're back. Anyway, we're keeping a close eye on the S&P. 2785 on the cash is where support should come in. If they break that, then you're probably going to start seeing a little bit of selling into the close. If that holds, then we're probably going to see 2790 at the end. So kind of interesting. Again, very light volume in the markets, even in the indexes. But when we get into the stocks themselves, incredibly light volume. Going into the Fed decision tomorrow and Wednesday, where we're going to continue to see lighter volume. Saw a lot of stocks run kind of this morning on fairly lighter volume, running some of the shorts out. But I don't know if there's any kind of legs, or we're just going to see that flip back down. But nothing out here that I really think makes anything exciting. Someone wants me to look at DDD. See if there's anything going on out here. You wanted 8 million shares for that March 15th high. That's 1370. You got 5 million shares on the 5th. Today you've got 1.5 million shares. This is where these things start getting a little bit problematic. But I think you want to see this one come back on light volume. You had a nice run, which we bought in the Tech Insider down here around 9. I think I bought it at 920 or 920 or 930 or something. Anyway, we sold it, made a lot of wood on it, pulled back a little bit to 12. It's not kind of finishing its ABC on the way back up. But again, this one's down here in these lows. It's gonna need a lot of consolidation. I think another move back down to that $12 level may be where the buy is on that. At least I'm hoping it is. What else do we have? AVB, Avalon Bay Communities. What else do we have? This one actually had a little bit more volume in the previous high, but wasn't able to hold it, pull it back. And of course, these REITs all kind of look like they had some juice. What's the, was it VNO? I think it's VNO, isn't it? VNI? Okay. There's another one. Same kind of thing. You know, the charts don't look all that horrible. They just don't have any juice right on it. I think VNI is the one I'm thinking of. Okay. As we're creeping up, must be one. I'll have to find that during the break. AUPH. Take a quick look at Arena Pharmaceuticals. Was looking to see if this one was coming back into support. If you were looking for something in the biotech industry, this is one of the better charts out here. Took off on the 11th of May and 14th of May, got up to 669, and it's been pulling back on very, very light volume. You know, $5.20, somewhere in there. This kind of looks fairly interesting. There are not a lot out there that do look that good, but AUPH you might want to keep an eye on. To Athena, ATHN, to Athena Health. This one's trying to break through the 158.66 high of July 21st. That had 2.2 million shares. You spiked it with 1 million shares on the 6th. Went up to 163.94, and now it's back into the trading range. So not a very good signal, but you do have 3 gaps, just 2 of them actually being in the same place. My guess is that you'd want to look at this back at 137. And, you know, you went through the previous gap, half the volume, you closed back below it. You're into the trading range. The energy wasn't horrifically bad off this April 30th low. You got the gap, but man, this last gap just seems like it's gasping for breath. To 2786 on the S&P cash. Evoca Water, Aqua. I don't see a whole lot in that one. ALKS, Alchemies. Again, a lot of these biotechs that were blown up are coming back into some of their gaps. This one is back into this gap down of 8 million shares on April 2nd. It came down 8 million shares. Yesterday or Friday, you had 465,000 shares. Today, 345,000 shares. So again, a lot of these things just like bounces in a downtrend. Acorn, the same thing. You got 2 gaps. I'd be looking for the 3rd gap and a 3-gap play to the downside. We'll keep an eye on that. Nothing in Aspen. AFL, which is Aflac, had 5 million shares on its last major high. That was 45.75. Got into it with about 3 million shares, maybe 4.2 million shares, spiked it a few times at the end of April. Went ahead and rolled back over. Now you're back into it. Last 3 days, 2.9 million shares, 2.3 million shares. Today, 910,000 shares as you're going after the 45.75 March 13th high. So just have to be very careful on these light volume tests because these things are starting to come out. Had somebody wanted me to look at Fake Book real quick. More bad news, doesn't seem to bother it. It's back up to this gap down that went from the 6th last week. That gap down was on 22.5 million shares. Today we're up with 9.7 million shares. So, you know, we had some juice. It's certainly that juice isn't going to be today, and it's probably even going to just be lighter across the next few days. FIT, Fitbit. This one had a huge short interest in it. Let's go back and look at that. Do I have it? FIT bi-monthly. 5 days to cover on the last reporting period. Short percentage is about 15%. Going back up against its previous high, this time with 39 million shares. So, yep, this is one of the shining stars against this December 11th high at $7.32 with 7 million shares. This one actually has it. But, yeah, 5 days to cover, and you had a big move in this thing. You know what? The problem, I remember looking at this one, it just had a lot of volume back at these lows. Really never, ever tested it well enough to buy off that low. But $4.51 did look like the buy in this one, and that's a nice run. I'm just wondering if anybody's using it or if it's just a big short squeeze. Oh, okay. And thanks. He found some shorts and decided to squeeze them himself. He found lemons and made lemonade with Fitbit. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And what are we at? 2785 and change. So be interesting next hour as we get about halfway through the pop of today that didn't have a lot of juice. Let's go back and check on volume now. Still under 4 billion shares on the day. So 6.1 if volume kind of holds. Maybe we make that. Maybe we make Friday's volume, but I think it's going to be close. Could be even a lighter volume than Friday. Then the FOMC meetings for the next 2 days. My guess is that we're probably going to see a little bit of selling into that meeting at 2. I'm expecting kind of a hawkish message that they have, and that will probably get a little bit of downside in the market happening before the end of the week. Whether or not they ever follow through with that, they were kind of running out of time before the election cycle starts. So kind of have to look at maybe getting one of those in, maybe 2 of those in before the election cycle starts. But I don't think they're going to get too knee deep in it before everything's going on. Fitbit was one of those. Somebody wanted me to look at Apple. Apple is problematic in many ways, but like I said last week, you got Buffett that owns a bunch. He can always buy more. He can always call up the guys at Apple and tell them to do a share buyback. There's a handful of things that he can do, and so that becomes what's going on here? Everything moving around? Is that just that? No, just that. So let's see what we got here. If I can get another one up and running. No, don't have enough time. Anyway, we'll see you tomorrow. Same bat channel, same bat time. Keep an eye on this. Close on the cash below 27.85. Could see a little selling over the next couple of days. Anyway, see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.